Dayna, 300 million is a lot when you're looking at the seed and first injection of money into these sorts of companies. Where is this coming from? What LPs are still interested in manufacturing and logistics here in the US?
Yes, that's a great question. I think what we've seen over the past, 2 decades that I've actually been investing in the space, but in particular over the past 5 years, is a ton of renewed interest in the space. Most importantly, first and foremost, from entrepreneurs who have built their careers in traditional tech sectors over the last 20 years, some more recent than that, turning their attention to the industrial spaces. From the LP side, our LPs, we're very thankful for a strong, stable LP base. Traditional endowments, foundations, large family offices, they're investing for the next 10, 20 years. They're really looking at long-term returns and building new swaths of the public markets. And that's where we think a lot of this industrial innovation will end up. These tech-first industrial companies can create a whole new segment of the public markets that hasn't really been appreciated today.
You're based out in Washington. How much more helpful has it been to have sort of the winds of change over at Washington, sort of being at the back of American dynamism, as it's called, or at least local manufacturing? That's what all the tariffs are about.
Sure. We think of them as the foundational industries of our economy. Again, we think about it on the long term. If you look back 20 years, you look at labor arbitrage, which was the main toolkit that a lot of U.S. corporates used to recover from financial crises, most notably the dot-com bubble. They sent a lot of jobs offshore to save money, and they stopped investing in technology. This has more recently, and rightfully so, become a governmental concern and issue, not just this administration, but administrations previous to this as well, especially over the last 5 to 8 to 10 years. We realize how drastically far behind we are in our manufacturing base, in our industrial base, not having the tools and the technology to actually be productive at the scale we should be as an American economy.
Dayna, Kara mentioned American dynamism, and I think Andreessen Horowitz's approach is that they'll say it's about the national interest, or Founders Fund will say it's about the military-industrial complex. But they're at the growth stage mostly, right? You're at the very early stage. In which specific areas of industry are you seeing innovations that need to be supported financially right now?
Absolutely. I think there is an America First need to it, but it's more about the technologies. It's about the workers. It's about setting up competitive jobs that they can, start at the brass tacks, start at the first principles of how they go to work every day, what they do, and how that bubbles up in the economy. So if you look back, we look at this as sort of a new tech sector, not just an American thing, not just an industrial sector. It's how do we turn these industrial industries into tech industries, like we've done with IT jobs since the dawning of the internet. We enjoyed mobile, we enjoyed big data. We are now really enjoying the advances of AI, and all of these industrial jobs aren't even connected, let alone, built on top of mobile technology. So there is a national interest and competitive dynamic and comparative advantage that comes out of that, but it's been woefully neglected for the past 25 years. And that's a lot of technical debt we have to dig ourselves out of.
When the pitch book hits your desk, how closely are you looking at that startup's ability to get access to public funding? Or, I guess, down the road, be acquired by a bigger company that isn't really innovating right now in whatever their manufacturing processes are?
Yeah, I think first and foremost, we look for, you mentioned early stage. The early stage investing sector is really built on incredible founders that can move at a pace that they just couldn't do inside a big company, or that big companies cannot do on their own. We don't think about companies that should be acquired one day. We think about companies that can go public one day. We think of ourselves as early stage but full life cycle investors. We're boutique. We can help entrepreneurs at the beginning, but we can also help them with that full commercial scale up to help them think about a public market exit one day. So we think about true disruption. We look at what's missing in the economy. What are the technologies, AI, physical AI, the things that we're good at here in this country, and how do we apply that to these sectors?